Hello and welcome to another update video about FETCH.AI. FETCH.AI is still in this correction. There's no evidence that the overall wave 4 correction is over. It could be over, but we need a little bit more evidence for that. The price did react to the support region I had defined here for this B wave. We broke above the trend line and now we see a strong retracement. Key is now to understand where the relevant support levels are. The price is still in an upper support area. Below that, the lower support area becomes relevant. This is only a look at the microstructure here. We're going to take a look at that in a minute, but looking at the bigger picture, nothing has changed. The chart is questionable given that we have a very weak third wave. It only reached the 1.236 extension of the initial 1-2 setup. When the price peaked here at 341, the levels are being respected, but it's just a weak third wave. That's a bit of a problem. As you know, normally a third wave should reach the 1.38 extension. Well, if it doesn't, then it means that there's a high risk of failure. So this makes this chart definitely not trustworthy, okay? But I've mentioned that already in the last videos. It is possible, and that is maybe a bit of hopium, but it is possible that in such a fourth wave correction, when a B wave is unfolding, so again, it could be A wave, B wave, C wave, sometimes in an ideal Elliott world, Elliott wave world, the B wave reaches actually those ideal targets that the third wave should have reached. All right, it's not always, it's not guaranteed. B waves are very chameleon-like structures, but it is something that they could do. So we have this A wave down, a high B wave, possible. Okay, that's what I'm tracking. Current thesis is this B wave might have started and then we could get a C wave down still. Or if the wave 4 has already bottomed, then we would also go higher. It will be difficult to determine a difference or to identify the difference between the B wave and the fifth wave to the upside. So we don't even need to make that distinction really. I mention it, but in practice it wouldn't make much of a difference. Tracking then the possible uptrend, you can see it is extremely choppy, so definitely nothing impulsive here, but it is possible that this is an A, B, C structure. So let's assume some kind of a low has formed here. The extent of the rally makes that likely. And we've had a first rally, but as I said, it was only in 3 waves, so not high confidence. We have a pullback in wave B, and then from here a C wave rally could unfold. Well, we've had a first 5-wave move. Let's go to the 1-hour chart. A possible 5-wave move, which could be wave 1 of C. And now it's all about, okay, is this a wave 2 pullback? Now, such a 5-wave move always needs to be, let's say, proven in the coming pullback or in the subsequent pullback in which normally a higher low needs to hold. Now, if you look at the structure here, and this is what we always have to assess dynamically, this doesn't really look like a corrective pullback. So it doesn't really look like a 1-2 setup. This is also quite deep, this pullback. Now it's holding support. It's holding that 78.6 retracement level. But it is quite deep, and it is looking quite impulsive to the downside. So I wouldn't rule out that this B wave is actually still unfolding, but that's why I shared with you already that lower support area in the previous video. Actually, if that B wave is unfolding, I need to lower down. I need to lower down this support area, and I'll tell you why. Because the alternative perspective would be, and I can actually highlight this in white, and then add a micro count for the white count. A wave down, high B wave. Yes, this is a 5-wave move, but it's not the most beautiful one. And as I said, if the subsequent pullback doesn't hold a higher low, this is our only choice to go with a more extended ABC structure. And it would simply be a different, let's say, subdivision. So the main support is at $1.17. Below $1.17, however, there isn't really any confirmation or indication anymore that a low was established here, and we would need to be patient still, and we'll then need to watch the lower support area again, which is between $1.07 and 52 cents with 75 cents as key level in between. So yeah, not really a great setup or scenario here, not really much clarity, but we can watch these levels to see if the B wave extends higher. Trading a B wave itself is one of the greatest challenges there is. You see that it is just choppy. So that's how I see the FET chart. Overall, not much happened on the FET chart in recent months. The decline, obviously, it's quite substantial. This is why I had to increase the wave degree. And we haven't got any confirmation a low is in, okay? So I'm just tracking there a possible high B wave. Maybe the fifth wave has started, but it requires a bit more evidence. But main support here on this chart generally is the 52-cent level. That's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.